Right now, a financial storm is brewing, and it's centered on the world's third-largest economy. This isn't just a local issue. It has the potential to shake the entire global financial system. We're talking about Japan and a situation that some analysts are watching with growing concern. For years, Japan has been grappling with a mountain of public debt, which has now reportedly surpassed an astonishing $9 trillion. To put that in perspective, that's more than double the size of its entire economy. This isn't just a number on a spreadsheet. It represents a significant challenge for the country's financial stability. The Bank of Japan has been navigating these waters with a unique monetary policy, including years of low and even negative interest rates. The goal was to stimulate the economy and combat deflation, which is a persistent fall in prices. For a long time, this approach seemed to work, or at least maintain a fragile balance. However, the global economic landscape is changing. With inflation rising around the world, central banks from the US Federal Reserve to the European Central Bank have been raising interest rates aggressively. This has put Japan in a difficult position. If they keep their rates low to manage their debt, the value of the Japanese yen could continue to fall, making imports more expensive and potentially hurting Japanese households and businesses. But if they raise rates to support the yen, it could make it incredibly difficult to service their massive national debt, possibly triggering a fiscal crisis. This is what some are calling the global contagion risk. Japan is a major player in international finance. It's one of the world's largest creditors, meaning it lends huge amounts of money to other countries and investors. Japanese investors also hold trillions of dollars in foreign assets, including US Treasury bonds, European stocks, and real estate all over the globe. If a crisis were to force these investors to sell off their foreign assets quickly to bring their money back home, it could create immense selling pressure in markets worldwide. Imagine a sudden, massive sell-off of US government bonds. This could cause bond prices to plummet and yields to skyrocket, making borrowing more expensive for the US government, corporations, and even consumers getting mortgages. It could trigger a domino effect, leading to instability across stock markets, from New York to London and beyond. This situation has drawn comparisons to past financial crises, like the 2008 global financial crisis. While the causes are different, 2008 was triggered by the subprime mortgage market in the US. The potential for a rapid worldwide chain reaction is a shared concern. The key difference here is the scale of government debt involved and the central role of a major sovereign nation's monetary policy. Back in 2008, the problem was with complex financial products held by private banks. Today, the concern is centered on the policy decisions of a G7 nation and the immense web of global investments connected to it. The interconnectedness of our modern financial system means that a significant problem in one major economy UHUNB contained. It quickly becomes everyone's problem. So, what are the potential warning signs to watch for? Financial experts are keeping a close eye on the value of the yen, the yields on Japanese government bonds, and any policy shifts from the Bank of Japan. A sudden, sharp depreciation of the yen or a spike in bond yields could signal that market confidence is wavering. Any unexpected announcements from Japan's central bank could also send shockwaves through the markets. The situation is like a high-stakes balancing act. The Bank of Japan is trying to juggle economic growth, price stability, and the sustainability of its government debt. But with external pressures mounting, their room for maneuver is getting smaller. This isn't about predicting doomsday. It's about understanding the risks in our interconnected world. Financial markets are complex, and many factors are at play. Japanese policymakers have a long history of navigating difficult economic challenges, and they have many tools at their disposal. However, the sheer size of the numbers involved and the potential for global spillover make this a situation worth monitoring for anyone interested in finance, economics, or global affairs. It serves as a powerful reminder of how intertwined our economies are, and how a crisis in one corner of the world can have far-reaching consequences. Understanding these dynamics is the first step toward being prepared for whatever the future holds. Thanks for watching. Follow our channel for more in-depth analysis on the global economy.